I am here at Global Investor Conference, about to kick off a fireside chat with the one and only Bill Sarris, who has to come off speaker. There he is. And I'm going to say bye-bye to Greg and Amit. That was very interesting, very informative. This is a fireside chat, and there's some enormous news that's going to be gone over in the course of this fireside chat. And for all of you who are listening and all of those people that will watch this webinar later, this is actually a complete leveling up of Linqto that we will get to by the end. But that's not where we're going to start. Where we're going to start is in the past. And Bill, what I want to do is I want to go back a few years ago when you and I were chatting, about just how hard it was to buy and complete the purchase of an interesting share, something we wanted to own. And for many of the people who are listening to this, maybe they never tried that. Maybe they never actually tried to own a piece of Facebook or Google before they went public. So Bill, let's start off there. Just how did it used to work?
Well, it's a good question, Matthew. As you know, because we spent, in October of 2018, you chaired that meeting we had at Wilson Sonsini, where we had like 14 pundits about this subject, and we spent all day, and we went around and round, and we knew that there was an answer solution that needed to be derived, but no one had the specific solution at that time because of the complexity of that market. So how it used to operate, how it still does operate mainly in the secondary market is an operation that's been around for, a gazillion years, ever since people started trading in the secondary market. And the issue with the secondary market for us always was, it wasn't liquid. I mean, you hear things, the topic of liquidity is bandied around a lot. If you look at Forge and, formerly Shares Post and Zambotto and NPM and equities, and all those in the marketplace that say they offer liquidity in the secondary market, what they're talking about, their definition of liquidity, is not the same as ours. Those companies define liquidity as giving liquidity to a founder or an early employee or an early investor. Linqto's been doing that for 3 years. We've actually invested $200 million so far, providing liquidity to those type of shareholders, those early shareholders. But once somebody purchases that, those shares are not liquid for the transferee. You can't you have to wait for an exit. So really, our definition of liquidity, true liquidity, requires an investment that can be resold at market, in market conditions without restrictions. And if you buy shares from a private company, they come with restrictions on resale. Yes. They always do.
Yeah, so I want to unpack that a little bit, Bill. Thanks for kicking us off. So Bill covered a lot of ground there. The way it used to work, and for the most part still does work, is it's a paper-based investment. So it's written up on paper, and the company has a record of who owns each share. And if you find someone who wants to sell all or a portion of their share, then you have to go through a process to come up with a price that you both agree on. You then have to agree that you're going to get into a contract, and ideally you would sign a contract before you then go back to the company and you ask for their agreements to remove some of those restrictions. And the biggest one is what we call a right of first refusal that most companies will have. And assuming they allow you to move forward, then they will complete the transaction on your behalf. And that might take months. And most of the time they may say no. And so that was you getting into it. Now the custody of it was easy because it was paper. And ultimately the lawyers and the company would have the custody of the paper. And then if you wanted to sell it, it got even worse, because now you needed to go out and find a buyer, a willing buyer, and agree a price and go through all of that process. and get the company to agree to let you sell. So that's how it used to work. And then Bill is absolutely right. The definition of liquidity isn't that I sold it once or I purchased it once. Liquidity is a measure of the velocity of transactions around the stock of an asset. So you have a stock of an asset, the number of shares, and the degree to which they turn over, they get bought and sold, divided by the stock equals the measure of liquidity. And so if you have a massive stock that doesn't trade very much, its liquidity is low. And if you have a small stock that trades a lot, its liquidity can be high. But the reality is most private unicorn stocks, which have relatively small stocks of their shares, don't trade at all, and they are illiquid. So all of that as context, and now we've defined what liquidity means. Liquidity would mean creating an environment in which the stock outstanding could be bought and sold. Liquidity, by the way, is also an output variable. It's a measure of what just happened. It isn't an input variable. But having said all of that, Bill, why do you think that today's private market is illiquid?
It starts with, probably starts with Washington, D.C. I mean, we've created laws since the 1933 Act, the 1940 Investment Company Act. We've created a model over a century of intentionally making it difficult and illiquid under the guise, which is typically done at a federal level, of protecting the individual. So it's like the SEC's charge since the beginning was to work against all those people who sold swamp land in Florida in 1928 that caused the crash in 1929. And ever since then, they have been promoting and proselytizing the fact that they're doing everything that they do at the federal government level, at the regulatory level, to protect the citizen. But what they've done is shut out 95% of the market, 99% of the market from being able to invest in this asset class. At Linqto, we don't believe that that is protecting the individual and the investor. We think it may be protecting Goldman Sachs or major investment bankers on Wall Street. This is the domain of large institutional buyers. No one has managed to bring this asset down to the level of us. I mean, average, it's not that these type of products can be sold to anyone. You need to be an accredited investor, which means you need to meet certain regulatory requirements. But even with that, there are roughly 100 million people in the world who would qualify to be accredited investors according to the regulatory rules. And there are fewer than 1 million that are invested in this asset class. They're shut out of it because of the cost, because of the, as you said, the complexity, because of the risk. All of those various elements are built in at the lowest level, laws and regulations that we started promulgating 150 years ago, and they're still active today. So it's just, we haven't caught up in the country with the way that market actually works.
Yes. Yeah. Yes. I think that's a good set of observations. So what we did all those years ago, Bill, it is quite a few years ago now, sitting together, was we asked the question, how might it look different? If we know it doesn't work today, and if it's difficult, complex, slow, and clunky, what might it look like? And I remember we put Coinbase up on the wall, we projected it on the wall, and we just said, look, this clearly is an environment where you can buy and sell fast, cheaply, and whether or not there's liquidity, because we don't know, it's certainly easy to complete the transaction, buy, hold, but also sell. And then we went through a thought experiment, Bill, which is if we could do that for privately traded shares, and particularly pre-IPO privately traded shares, wouldn't that be cool? and you went off and you made it happen. And that was Linqto. That is Linqto. That's buy and hold. It's buy and hold. But we always knew that you were going to add sell, that you were going to make it a fully liquid alternative trading system. So let's go on to that question. You know, Linqto just got this quite remarkably positive news that you've been approved to operate an alternative trading system, and you have your brokerage sign-offs. That's my understanding, at least. Just explain to the crowd, Bill, what were you just approved to do, and what is an alternative trading system?
So an ATS, they're only, I think, since they started creating the ATS model, there've been maybe 80, 90, 100 ATSs approved over the last 10, 15 years. So, you know, it's not a common thing. It's what we used to think of, you know, back in the old days as OTC, over-the-counter type transactions. It's really, it's like an exchange, except with a very narrow category of the products that are used. And our products are private investment vehicles. And it allows us to then resell those in the basic. So you remember, I'm sure you remember, it's been 3 years, but when you and I were talking about this at Digital Garage, and Greg was in that meeting too, I think, and we looked at models. You know, I think what helped me the most in your advice and Greg's advice were the models. What models should we emulate? So as a matter of fact, if you looked at our very first 3 products on the platform, they were Coinbase, Robinhood, Ripple, because we were emulating them, right? So but that issue of, I think what hit me the most in the private investing made simple mantra, which actually was your phrase, thank you, Matthew. But the idea that in order for this to work, the system was extremely complex. And the only way it could work was be through technology and business models, taking the complexity out of the system so that it became a point-click invest system, a T0 system. I mean, I think the way we looked at it as we were building it, it was almost from a different lens inward. Instead of saying, how are we going to solve for people who want to invest through their IRAs when the IRA has to take 3 weeks to approve it? Or how are people going to invest when you've got to go through 2 months worth of a ROFR approval? We went from the opposite perspective. We said, in order to make this work, it has to be like, we're more like Amazon than we are Fidelity. You know, it has to be that people can come in, the crowd that we're looking is not really the standard investment crowd that uses Charles Schwab and buys, you know, and is already wealthy and is playing with their wealth. Our typical investor is 25 to 45 years old, is too busy to look at things, wants to come in and get it like they do everything else in their life, point, click, invest. And in order for us to create that model and open this market up to those other 99 million investors who are out there, we had to make it simple. So everything we've done for 3 years has been aimed at that one mantra, that T0 mantra, because that's really how people consider simplicity when they're looking at it from the other direction. So we knew, you came up with actually our 3 pillars. I remember I was doing it on the whiteboard that day. Yeah. You know, there was accessibility, affordability, and liquidity. We knew that if we were going to change this market, those were the 3 things we needed to produce. Right away, we produced accessibility through the platform, through technology. And right away, we created affordability through our business model, where we act as a principal. We go out and buy the investment first. It's in our portfolio. We create an SPV out of it and then allow our members to invest in it. And that's a different model. By doing that, what they're investing in is not the shares of the company. They're investing in a company that we created, that we built, that holds those shares, and that makes them liquid. And we've always had that model of getting toward liquidity, but we also knew that there would be no liquidity if we didn't have enough volume
Yes.
of all the product before we got to liquidity. So we started with the first two pieces
Right.
as we were looking for liquidity, but we also knew with liquidity in advance, this is what, when we were talking maybe 3 years ago, 2.5 years ago, we started going for the approval process in order to make this work in the current regulatory climate. I mean, there are a lot of people advising us we should tokenize security, do all things that I know will happen within the next 5-10 years. But we worked within the current climate. In order to make it work from a regulatory standpoint, we spent a fortune, going
Yes.
through all the regulatory agencies. First, we became an investment advisor. And then we had to go to FINRA to become a registered investment advisor, and then a broker dealer. And then the broker dealer had to have an ATS. And like all of those things are necessary for us to create the complex system we do. So when it comes back to the investor, it's just point, click, invest.
Yes. So thanks, Bill. So you've got the approvals needed to operate an alternative trading system. I know you've been building out the code to enable the sell side of Linqto to go live. And, I'm anticipating that this means that we as users of Linqto will be able to buy, hold, and now sell as well. And I just want to, technically, none of that means liquidity yet, because if we all choose to buy, hold, and none of us choose to sell, there won't be any liquidity, because it will be a illiquid marketplace. But if some of us or all of us choose to sell, then we will have buying and selling, and then liquidity will begin to rise. So let's just give them a peek. Let's give them a peek of how simple this will be. So we started off this segment by talking about how it used to be. It could take months and months and months to sell something. So for the 112 people currently listening, if they had all bought, let's say 10K of something, I'll pick one out of the air, Ripple. If they had bought 10K of Ripple in the past on the Linqto platform, now when you activate the selling within the alternative trading system, what will they be doing, and how long will it take, and how easy will it be?
Okay, 3 questions there. In the model that we've been working on from the beginning, it's always been private investing made simple, and that carries over to the sell side. And we have, you said, we've been working behind the scenes for 2 years building it. We knew it would take a long time to build, but we also knew it would take a long time to get all the approvals. And so we're doing both of them simultaneously. But where we're going in terms of the final, like how it works, I'll share my screen with you. This is our dev site, and just kind of give you a quick peek of what we do. Those of you who are familiar with the site are familiar with this screen. It's our invest screen. When you go to your portfolio after this is launched, currently you see all the things that you have in your portfolio, but you don't have the opportunity to sell them. You only have the opportunity to buy more. So here's a portfolio. Say I wanted to sell some of my Linqto. I've got 4,812 shares, and I paid as my cost basis for these shares. Now, when I look at my portfolio, I can buy more, or I can sell some of this. I can sell all of it, or some of it, or part of it. I've got an investment amount that I know. I know that I paid an average cost per share of a certain amount. I know how many shares that I own. If I decide I want to sell some of Linqto, I set the asking price. It's the same as the other side of the system. It's not an ask bid type of system. The seller sets their price. Cheapest price is what goes up on the platform to the buyer. So if we got 20 sellers, it starts with the cheapest one. There's a slider, just like there is now, where people can engage and buy from more than one person, starting with the lowest priced one and going up, and they can find it. And the person who's selling can change their price. Maybe I want to try to, maybe I want to discount this because I just, have a need to get out of it. Maybe with a discount, I want to sell 1,000 shares. Well, it'll tell me what my total will be, the transaction fees, the proceeds, and my projected gain or loss. And then I can decide whether I want to sell or not. If I go out there to the platform and I see that a lot of people are out there at $10 or $11 or $12, and I want mine to sell. I can come back and change the price.
Right.
So what we're doing is creating an open market. And the nature of the open market that we trust is, like you say, what if nobody wants to sell? I mean, we've got, I think, 3,247 members who own Ripple, total of $65 million worth of shares. If somebody comes in and wants Ripple, they'll be able to buy from one of those people if
Right.
they want to sell. If they don't want to sell, obviously, people don't have to sell. It's like any other market, but the
Yes.
price will determine it. So
Okay, so let me
I'll
ask you a
keep
couple of
offering
quick questions.
more or offering less, and eventually we see the price seeking the market level, but it needs to be based on an open market.
Okay, so let me presume here that it is as easy as you say, and as you're showing us, and that if we did go forward, carried on clicking, we would be able to execute that trade. Now, I think the audience saw there that you set the price, and that means that Linqto is not guaranteeing liquidity for your shares, because you set the price, and it presumes, therefore, that there's someone who wants to buy at the price that you are providing. And if no one's buying, or if no one's buying at your price, then you would not be able to sell. So let's be clear about that. Linqto is not guaranteeing that you can sell. And
it's kind of like a limit order. If
Yes.
you think of public, generally when I go into my Schwab account, my public account, I don't pick market, whatever it's up, because I don't know where the market's going. I pick an amount that I want. If it hits that price, that's how it sells. That's kind of how we design this.
Okay, so now let's assume that there was a transaction, the market was clearing, there was a potential transaction. So in the example you just showed us, you set the price. Let's say you sold all your shares. Someone on the other side said, yeah, I'll take that, I want that. And so now you've got a match. Roughly, how long will it then take until the money shows up in the seller's account?
It should be immediate. I mean,
Really?
barring certain factors, it will be immediate. Before we get the ATS out, our new wallet will be out, and the new wallet connects to Chase FBO accounts. So, like all other investment platforms, our current members, currently, if you go into the platform, you can wire, or you can, if you pay through your Uphold wallet, the settlement is immediate because the funds are there. And because what we're holding, the asset that we're holding, does not need further approvals to go through. It's all of our approvals that we create in situ and in real time. So if somebody comes in, this will now be a peer-to-peer transaction. If this person over here has the funds to make this transaction, and both of them have an account, as soon as the transaction is created, the funds get transferred from this account over to this account.
Yeah.
And if there's a problem with the funds and the funds transfer, obviously, Linqto steps in and we look at things. But technically, it's a T0 platform on that side.
Okay. So thank you for that as well. So so let's see. Is there any other platform in the world that is legal and compliant for investors like us that will be able to do what you just described?
I don't know all the other platforms in the world. I don't know necessarily if somebody's going to come out tomorrow with a new thing that I haven't heard of.
Oh.
We've been doing this for 3 years. I haven't seen yet another one that's safe. And the main reason has to do with the derivative, the product that's being sold. In order for this to work, this would not have worked for Linqto 3 years ago. We wouldn't have had the product on the platform 3 years ago. I mean, kind of, if you look at, show you another screen here. If you want T0 on the sell side, liquidity on the sell side, there are a number of things that are needed. You and I went through this years ago. I mean, we knew in advance we needed to create this environment or we wouldn't have a resellable product. One of the things we needed to create was equity in unicorns that's sellable without restrictions. You can't, if you go through any of those other brokers and you buy something, If you want to resell, you've got to go through that same process again. All those restrictions still hold. What you bought were shares in that issuer. From Linqto, you didn't buy shares in the issuer. You bought units in LLC that own the shares of the issuer.
Right.
And so we made those resellable. Even today, without the ATS, if any of our members want to go in and could find somebody to resell their stuff to, we don't limit it. They could go do that.
Yes.
But the other piece of it too is we're dealing in the secondary market. It's not a volatile market like other markets where the prices are going up and down by the hour. We're not expecting that when we launch this, we're going to have a lot of day traders. Our members still are generally in it for the long term. They're looking to invest today in something that's going to end up going public. You know, that's what they're looking for. But in order for that security to have value, it has to be mature enough that it's risen in value. And in the secondary market, that might be 6 months or a year. We have investors on our platform who invested in things 2 years ago, 3 years ago at 30 cents. And now those shares are worth maybe $3. So we have that matured product that no other system has. You also need a market of investors that are willing to purchase it. Otherwise, you know, most lay people in this particular category don't have the wherewithal to go out and find buyers for it. We've now got 66,000 accredited investor members on the platform. So we've got the market that can repurchase it, and the platform has to make that investment accessible, which we've already done. The final piece of the puzzle was the regulatory approval to operate the ATS. And
Yes.
that we finally got just last week, as I said, after 2.5 years of going after it.
Yes. So as we're speaking, a few questions are popping up, and I've still got a couple more for you, but I'm just going to take a couple that are showing up in the Q&A. I think it's fair to say that there is no plan right now to provide leverage on top of the assets that people are holding on the platform. And Carl asks a great question, which is, you know, if we exposed, in the example of Ripple, a new price where people were willing to buy at a fraction of, you know, the normal price, because, you know, a willing buyer and a willing seller agreed to do that. What might that do to things like Ripple's internal stock options warrants and 409A valuations and other things. And I think the answer to that, Carl, is technically this is a derivative product. What's actually being bought and sold is a Linqto liquid share. And it's more than just the underlying asset Ripple. It's also got some costs associated with. So I would argue it's probably an apple and an orange, but ultimately the lawyers would have to decide. And so that's sort of very interesting and important question, Carl. And we'll see if we are unleashing a market where new and lower prices may get exposed. And then Edward asks questions about, you know, will the accredited investors only be able to sell to other accredited investors on the Linqto platform? And the answer is yes. And that is actually the big call to action for everyone listening to this today and in the future, which is, you know, it sounds like a lot, 65,000, but it's actually a very small number in the grand scheme of things. And if you can encourage your friends to come to the platform, that's how liquidity goes up. Ultimately, if the 65,000 is 650,000, there will be more liquidity for you and for everyone else. And by the way, if you know someone who wants to buy your shares, if you encourage them to complete the transaction by becoming a customer on Linqto and buying it from you on Linqto, not only are you guaranteeing yourself some liquidity, but you're also expanding the ecosystem, and that would be very good for everyone as well, because a new person would be joining Linqto. Okay.
And making money. I think it's important because a lot of people may not know this. Our Linqto Bucks referral program. Okay. If you go into the site and you're a member, go to the account section, look up Linqto Bucks, you'll see a link there. You can give that link to any of the people that you want to come in as investors. They get $250 off of their first investment. And when they make that investment, you get $750 off of your next investment. So, I mean, we do have people who work that system to the point where they're buying a $10,000 chunk for only 5,000 because they've got Linqto bucks, accumulated from referring other people in. That, as you say, Matthew, it benefits the entire system. What we're building is a network effect for this system, and we need to have volume in order to do that. So we built the entire system, and we haven't really pushed on the 100 million potential market that's out there because we wouldn't have the system ready first. But now that's our focus.
Okay.
Our leadership meetings, everything we're talking about leadership for 2023 is people, volume. We've created a 1 million member march. We went from 25,000 to 65, 70,000 members this year. Our intention for next year is to go to 1 million. Now that we have the system in place, we didn't want to push it too hard, because the opposite side of this liquidity system and all that is, let's say with the current platform, tomorrow we merge with somebody and we had 1 million new people. They would buy out all the existing properties on our platform, and it would take us 2 months, 3 months to get anything back on. All of a sudden we'd be a platform without product for 2 or 3 months. With the ATS, we never have to worry again about being without product. It's only a question of price. There are enough buyers out there that want to buy Ripple at $200 a share, because that's what it goes up to. They'll end up getting it from our people who bought it at $25 a share. If they don't and it's lower, it just won't sell. But the intention is ultimately to get it to that open marketplace.
Okay, so let's just, I think you just threw something out there that I just want you to share a little bit more with the audience about. And just because Edward threw the challenge at me, I think we're going to unpack that, Bill.
Okay.
So the million investor march for next year, what are your top 3 ideas for how you think Linqto can get to 1 million people on the platform?
The biggest issue we're facing right now is scale. And we didn't have the capacity to scale before. We have it now. So we've already done the techniques that we know are necessary in order to get those. The 2 main ways we bring in new people, I mean, other than our referral program, but in terms of marketing, have been through influencers and paid, like Google ads, paid search marketing. We know how much we have to spend to bring in 1 new user on Google ads. There's a cost of acquisition, just like other companies. We also know that 1 new person coming in, based on our record from the last 3 months, makes us $100 in revenue in the first 30 days. We can have a budget, a recurring budget. If we can stay within a cost of acquisition of $100, we can have a recurring budget and bring in as many people as we need to bring in. Our current cost of acquisition is about $20. Mm-hmm. So we have the capacity to spend. We got a $25 million balance sheet now that we built out. So we've got the capacity now to spend to make that happen very quickly through marketing efforts and through our referral program. And we just believe in the ATS, and that once it gets out there, it's going to be a game changer. And that will bring us a huge amount of press and other reasons for people to join.
Okay, great. Thank you very much, Bill. So we got into additional questions, and I know we've got time, and I know Kareem hates it if we get ahead of time, because then, of course, the next panel isn't ready. So Lisa asks, and in fact, Ed had also sort of asked, how do you get and expand this, this solution to secondary markets beyond Linqto itself? So how do you essentially provide onboard, on-ramps and off-ramps to other people's groups of investors? That's one way of thinking about it, because obviously if this is only at Linqto, then it's all about people on the Linqto platform. So have you thought about that? Is there any plan to try and provide on and off ramps so other investor communities can participate as well?
Yeah, it's been a very strong push since Leo LaForce, Chief Revenue Officer, he started in July he and Joe have been working on Linqto Wealth and Linqto Professional, which are two new programs that bring in other groups so that other groups can participate and make revenue off of participating from their people participating in our programs. And so that's a big part of the growth aspect, is cooperating with the rest of them. I think there's a piece in here too, Lisa, that we don't know yet, because it's, I mean, when the difficulties with this, and we get asked a million questions like this all the time, no one has done this yet. So we are making all these projections and we're saying this is going to happen and that's going to happen. We don't know until it gets out there. And the way we've always worked, we're tech people who build a securities platform. We're not a securities company who decide to build tech. So our process for building all of this out from the very beginning has been a very agile process. We build a minimum viable product. You know, we don't try to figure out how is this going to work and let's build the whole thing over the next 20 years and get it out there. We go out with the minimum viable product. Our customers give us feedback. They give us feedback every day by what they're clicking on. Our most valuable resource really is those 65,000 members. You know, as Randy Williams describes it, Matthew, you know, swarm intelligence. I mean, we've taken swarm intelligence to a new level. Every time we're data geeks, so every time they click on something, every time they desire something, every time they buy something, it informs us on our next moves. We'll get the ATS out. People will be able to function with it, but I don't know that the following month it's going to be the same as it was in the first month, because we have to change it up to whatever the market demands. So, but the ultimate goal is what we look at. The ultimate picture, like with T0, it's just the ultimate picture here is this free market in the private sector. That's been there since the beginning, and we'll get there as we go by constantly modifying the system with that in mind. Not how do we make more money? How do we do this for this party? How do we get, it's always going to be about creating the free market, and that will take care of itself.
Great, thanks, Bill. We just got 3 questions, which are essentially the same question, because they're all from people who are either asking on behalf of or who are themselves not accredited investors. And so there is sort of a question here. Maybe it's really a question for Joe, I'm not sure. But it's a question, would you, as an example, contemplate taking a cross-section of you know, different products that you have on your platform, put them into a fund and have that fund be qualified for non-accredited investors, such as Kathy Woods did, and offer that as an offering on the platform. So essentially, non-accrediteds could then buy at least an index of Linqto if they couldn't buy each and every one of the Linqto products on the platform. Is that something you and your team have considered or thought about?
We're with all those approvals that we talked about, one more that is in process is the Reg A Plus approval process that will allow us to create retail type investments. And another thing that we're working on right now is ETFs for the platform. Eventually, we don't see this as only in the platform for accredited investors. Accredited investors will be able to buy X because you need to be an accredited investor to buy X, but we'll have NFTs, we'll have real estate. Well, there'll be a lot of different asset classes on the platform eventually. We've kind of taken this rifle approach. We went out, well, you know, you were part of our investigative process 3 years ago. But when we went out and asked everybody, you did a lot of this research for us. We asked everybody, if you could invest in one asset that you can't invest in today, what would it be? It's like 95% of them came back and said unicorns. I mean, we went with the high demand product. That doesn't mean we won't do others. We have all of that in the plan.
Yes, and in fact, let me just amplify that because we've got 5 minutes left. We did do work in my prior life looking at investment appetite from different segments of communities in different geographies globally. And just bringing that to sort of a simple point, if you're a digital native and if you're in North America, it's one of your top 3 answers is crypto, and a second of your top 3 answers is always, I'd like to own some of the tech companies that I use and love, which is typically because they are being used and you know them, they tend to be pre-IPO unicorns. So, so 2 out of 3 of the answers in North America and in fact in Western Europe are accounted for by what I just said. If you're in the Middle East, your top answer actually is real estate. So if you're a digital native in the Middle East, the first thing you want to own is real estate. And then after that comes typically some sort of hard asset, gold, diamonds, or something of that nature. And behind that comes crypto. At least that's what we found when we did that study. And then out in Asia, and this is now a massive generalization because Asia is so broad and it does vary by market, but it tended to be a hard asset first. So like in India, it's gold first. Then it tended to be crypto, especially in places like China, because they saw crypto as a way to preserve their value and move it without needing to report what they were doing and how they were doing it. And then again, you know, the tech stocks often surface, but they tended to be different tech stocks. So they might say WeChat or Tencent or Alipay. They wouldn't be saying Coinbase and Ripple because they don't know them. And so when you look across the world, in the top 3 for most digital native communities, owning a little piece of a company that I know and love and use tends to be a top 3 answer. Whereas, you know, obviously when you get down to something like early stage venture, they don't put it on the list because they don't even know the names of those companies and they don't know, you know, what early stage venture investing looks like. So that's part of why we started with unicorns, or at least, you know, Bill and his team started with unicorns, and then there were these other commodity asset categories that we were thinking about. Now, having said all of that, Bill, realistically, will there be a second category opened up in 2023?
And most likely there will be. I mean, we're at that stage now where we've been discussing it so much that my guess is we'll have all the other pieces in place and we'll be doing what that next one might be. It's, you know, it'd be decided by our leadership team, but that's like herding cats. Everybody has their favorite right. of what the next thing should be. My favorite, just because of my own background, is real estate. Our first .com company was the first national real estate listings online company. We sold it to Microsoft, and we've got a deep background in real estate. I was a developer, you know, all of that. To me, real estate is so similar in terms of the problem and the solution to this one, to unicorns, that it seems like a natural piece, because it is because it's like the secondary market. You have to get into a contract, you have to wait to buy things, you have to go through a process. Right. And we believe that we can make that process point, click, invest. So that might be the next one. And okay. I'll let Karim speak. He's
just part before of our leadership speaks, team. I'm just going to wrap this up because we're bang on time. So let's take it from the top. You know, the whole purpose here was to give investors, like everyone who's listening, something they couldn't get anywhere else in the world in an accessible, affordable, safe, secure, compliant way. And that is today what Linqto already provides you. But we all knew that if you only could buy and hold, you wouldn't be very happy over time. So you needed to have sell to, and Bill and his team are turning that on very shortly. And that is a dramatic leapfrog into the future, because this becomes a true private investment platform with both sides of the marketplace possible for all of you. Liquidity is a derivative of whether or not you choose to sell. If no one sells, there will be no liquidity. If there are not enough buyers on the platform, there will be no liquidity. And if you choose to have a price that's too high, no one will take the product from you. So you do, to some extent, control the liquidity on Linqto. If you encourage more of your friends to join, if you choose to sell pieces of things, and if you set prices at which the market clears, then this will become the best and most liquid platform in the world. And you can definitely all have a role in that. And then the last point that I just re-emphasized, because Bill said it, and then I'll add one of my own. Bill did say there is a referral program in place, so he's trying to encourage all of you to help Linqto grow. And then the last point I'll throw out there is this is what's going to drive the value of Linqto shares for all of the people in the room who have bought Linqto on the platform. So to just be absolutely clear about that, we can dramatically increase the value of our own investment in Linqto if we really make this a liquid platform. And so I'm going to close at that point. And Bill, thank you so much for this Fireside chat.